Thanks for clicking. Toronto's Real Estate Board just released its data for the month of June, showing continual price reductions and slowing sales across the board. The numbers, which we'll get into, are hardly a surprise as we heard multiple stories throughout June that the frenzied real estate market was over and that the Toronto housing market had shifted in the buyer's favor.
I'm the captain now.
So what I want to do today is go over the Toronto real estate data, discuss some of the shifts we're seeing in buyer behavior, and then discuss what to look for next. Toronto's falling real estate market and the Canadian real estate market as a whole are likely to be on the minds of the Bank of Canada when they make their policy rate decision next week, with many predicting a 75 basis point rate hike at minimum. We'll obviously have updates out on that policy rate decision. If you want to get those updates, make sure you click like and subscribe. But for now, let's get into this data. The benchmark price of a home in Toronto, that is the home combining the most popular set of features, fell again in June down to $1,204,900. That's a $57,000 decrease since this time last month, and a $150,000 decrease from April. So a $150,000 decrease in the benchmark price of a home in Toronto in just over 3 months. Next up, we also saw a decrease in the average price of a home in Toronto, which was down in June to $1,146,254, or a $66,000 decrease since this time last month, and a $108,000 decrease since April. Finally, the median price of a home in Toronto. That's where half as many homes were sold for over that price and half as many were sold for under that price. The median price of a home in Toronto fell below $1 million in June, down to $985,000. And that $985,000 is a $65,000 decrease from this time last month, and over a $100,000 decrease since April when it was $1,098,000. So, benchmark price, average price, median price, all dropped by around $60,000 in the month of June, are all down by around $100,000 within the last 3 months.
Coming to its bitter end.
And this makes even more sense when we look to the sales price to list price ratio. That is, by what percentage did the average price go over asking price? So if the asking price was $100,000 and the home sold for $105,000, the sales to list price ratio would be 105. That ratio in June was down to 100%, which was down from 103 in May and 107 in April. Homes on average are going for roughly what their asking price is, which is a big difference from the bidding wars that we've seen over the past few years. And the end of bidding wars makes sense when we look at the lack of inventory in Toronto. The months of inventory indicator, that's if no more homes came to market, how many months would the Toronto market last before it ran out of all homes available? That indicator was up to 1.1 months in June, which was up from 1 month of inventory in May and 0.9 months of inventory in April. So we have a lot more inventory coming to market, a lot more inventory available with less demand, which we'll talk about in a minute, equals price drops, which I think we saw all across the board throughout the month of June in Toronto. And these decreases really didn't come as much of a surprise given the amount of information we were hearing about a shifting market throughout June. Beyond the increase in distressed deals, which we talked about in another video, the Toronto market is seeing a real shift towards that of the buyer, as there are far more sellers than there currently are buyers. And we saw this in a number of articles last month as well. Toronto realtor British Preapprovals described a real estate market where buyers are waiting on the sidelines with the understanding that if they continue to wait, prices are going to come down even more. And I think we saw the data is definitely bearing that out, with price drops across the board and a 41% drop in sales since this time last year. And it's not only Toronto. We've seen this trend across Ontario with buyers waiting on the sidelines in the hopes, in anticipation of further price drops going forward. And the inverse of this works as well. If you're a home seller and you were planning on putting your home on the market at some point, you're going to rush your home to market as soon as you can in the hopes of getting the highest price available before prices drop completely.
Don't tell me what I do.
But these price drops are likely to continue for some time. Perrick noted that a lot of the Toronto buyers are still working with pre-approvals that they received in March and April. As pre-approvals, as rate holds, are traditionally good for 120 days, a lot of these buyers in the Toronto market still have pre-approvals that were qualified based off 5.25%. Whereas now, a new pre-approval would have to qualify based off of rates currently available, probably qualifying in and around that 7% range. So that's going to have a big effect on the buying power of Toronto buyers going forward, of Canadian buyers as a whole going forward, as they're going to qualify for quite a bit less mortgage amount than they did when rates were much lower 120 days ago. Although mortgage rates are shifting up and down right now, although relatively minorly, we are expecting to see a major rate hike next week coming from the Bank of Canada, with most analysts thinking that we're going to be looking at a 75 basis point rate hike, which will likely result in higher mortgage rates going forward, which will further decrease the buying power of the home buyers that are still in the market, which will put even more downward pressure on Toronto's real estate market, on Canada's real estate market. We'll obviously have an update out on the Bank of Canada's rate announcement coming out next week. If you want to get those updates, make sure you click, like, and subscribe, and thanks so much for watching.